Hi everyone. Today, HDIN Research presents a quantitative deep dive into JSR Group's financial health and strategic pivot. As JSR transitions from a traditional chemical entity to a global leader in high-end semiconductor materials under JIC's privatization framework, we examine the underlying data to determine if current financial volatility represents a risk or a calculated restructuring, reset. To set the stage, we observe a significant complication: FY 2024's net loss of 217.5 billion yen. This has triggered distress signals in traditional credit models. However, our analysis addresses the core question: is this a sign of insolvency, or is it a big bath accounting strategy designed to clear the deck for the 2030 semiconductor expansion? We will evaluate this through a neutral, data-driven lens. We begin with the quantitative foundations. To understand JSR's future, we must first normalize the raw financial metrics from the period of privatization. This table summarizes JSR's financial position under IFRS. While total assets remain stable at approximately 1.15 trillion yen, the retained earnings show a significant deficit. Notably, however, we see EBIT returning to positive territory in the first half of FY 2025, moving from a massive loss to a 19.3 billion yen profit. This is the first indicator of operational recovery. Applying the Altman Z-score model, we see a stark contrast. In FY 2024, the score was minus 0.1315, primarily dragged down by negative retained earnings and operating losses. By H1 FY 2025, the score improved to 0.6350. While still mathematically in the distress category, the delta represents a 482% improvement in quantitative health within 6 months. In this visualization, we map JSR against the standard Z-score thresholds. Although JSR remains below the 1.81 feet safe barrier, the trajectory is the key takeaway. The transition from a negative value to a positive trajectory signals that the period of maximum financial vulnerability has likely passed, driven by the stabilization of the digital solutions segment. We must interpret these numbers within the context of big bath accounting. The 157.6 billion yen impairment in life sciences was a non-cash event. By recognizing these losses now, JSR is effectively, cleaning its balance sheet to improve future return on assets. Furthermore, the LBO debt is supported by JIC, providing a level of sovereign-backed financing resilience not captured by traditional formulas. Using the Harvard framework, we see a clear separation between accounting optics and strategic reality. Strategically, the firm is concentrating on high-margin lithography. Financially, the current high leverage serves as a bridge to fund the R&D required to meet their 100 billion yen core profit target by 2030. The negative ROE is a function of the profit margin, not necessarily a failure of business logic. Asset turnover is currently low at 0.35, reflecting underutilized capacity in segments slated for divestment. As JSR lightens its asset base, we expect turnover and margins to expand in tandem. Looking at the strategic positioning, JSR's strength lies in its dominance in EUV photoresists and disruptive MOR technology. The primary threat remains the geopolitical landscape and export restrictions. JSR's strategy is to leverage its, indispensable status in the global semiconductor supply chain to mitigate these macro risks. On the frost radar, JSR maintains a Tier 1 position for innovation. Their 20-year partnership with IBM and the Inpria acquisition place them at the forefront of sub-3 nanometers process materials. The growth axis is currently in a recovery phase as they prune low-margin non-core businesses. The digital solutions segment is JSR's core engine. By acquiring Yamanaka Hutech, they have expanded from photoresists into CVD and ALD precursors. This allows JSR to provide a comprehensive materials portfolio to global giants like TSMC and Intel, increasing customer stickiness. Regarding non-core assets, the plastics division remains a stable cash cow, targeting the EV market. In life sciences, the strategy is aggressive restructuring. By divesting CRO and IVD businesses and focusing on CDMO stability, JSR is reducing operational volatility. Objectively, we must monitor operational risks. Recent maintenance shutdowns in U.S. plants suggest that global manufacturing integration remains a work in progress. Additionally, the risk of brain drain during such a massive structural shift is a factor management must address to protect their R&D pipeline. JSR scores high on environmental metrics, with SBTI certified targets. Governance is in a transitional state. Following the delisting, transparency is maintained through a robust external board and specialized advisory committees to ensure alignment with long-term stakeholder interests. Human capital is the primary driver of innovation. JSR is implementing a unified global job grading system to ensure that talent in Japan, the US, and Europe can be deployed effectively. Their goal of 10% female management by 2030 reflects a commitment to diversity as a business necessity, not just a metric. The R&D process is being revolutionized through material informatics. By utilizing AI to simulate chemical properties, JSR is significantly shortening the time to market for new materials. This digital transformation is a critical competitive advantage in the fast-paced semiconductor industry. The roadmap to 2030 is clear. We are currently finishing the cleansing phase. The next 3 years will focus on scaling up MOR and ALD technologies. If execution remains on track, the goal of 100 billion yen in core operating profit is a mathematically grounded projection based on current market demand for AI-related hardware. In summary, while the Z-score indicates a quote, distress level on paper, our deep dive suggests a structural rebound. The strategic focus on 3 nanometers/EUV dominance, combined with the divestment of low-yield assets, positions JSR as a high-conviction recovery play in the advanced materials sector. Thank you for your attention. For more granular data or custom market research reports, please reach out to HDIN Research at sales@hdinresearch.com. We are now open for any technical or financial questions you may have.